What's up, everyone? It's the Portfolio Plug. In this video, I'm going to teach you how I was able to make 80%, $1,000 in less than 5 minutes in the stock market using this simple options trading strategy. First, pull up your Thinkorswim platform or any other platform that you use. Personally, I like to use the Thinkorswim platform through TD Ameritrade. And the reason why I like using them is because you're able to get in and out of a trade a lot faster than a lot of platforms that's out there. And they offer pretty much everything that's in the option chain. What I mean by that, let me just take a look, right? So as you can see, so this is the option chain. The option chain is where you will see all the contracts. It has all the strikes, expiration date. This is what you use when you're trading, right? So for example, you see here, it has everything. It goes up to January of 2025. Most brokers, some brokers, they don't offer that. For example, Robinhood, you can't see all the option chains. I know some of them are missing. There's a couple other platforms that's out there that don't have all of them. But with TD Ameritrade, Thinkorswim, they have everything that's there. And in the fill time, so say when I see something that I want to enter a trade, all I do is hit the trade, get in, it automatically instantly fills it versus certain platforms. It's like a 5-second delay. It takes a little bit of a time to get filled. This allows me to get in and out of the trade faster. And when it comes to trading, options trading, you want to be able to have that because that 1 second, 5 seconds can make a difference whether you win or lose the trade. Right. So these were the 4 stocks that were on my watch list that I was looking at trading for that day. And then we're going to look at Amazon. Amazon was the stock that I traded. So we're going to look at Amazon. That was the stock that I traded and made 80% profit on. We're going to pull up Amazon and we're going to look at Amazon in a 1 minute time frame. When I caught the trade, it was in a 1 minute time frame. We're going to look at Amazon. And then what I'm going to do, I'm going to remove the studies. I'm going to remove all these different things, all the indicators. Normally when I trade, I have all these indicators in there. We have the RSI, the MACD, the moving averages, the different moving averages. But for that specific trade, I did not use any of these indicators. It was more so just looking at it based on a certain pattern that I saw, which was the bear flag pattern. And I'm going to explain what that is and why I got into that trade. So let me remove this and it'll be a lot easier for you to see the chart bigger. All right, so this is Amazon. All right, we're looking at the 1 minute time frame. Yep, perfect, a lot bigger, right? So prior to the market opening, I always like to look at the pre-market, and therefore that's how I come up with my plan and how I'm going to attack the day, what trades I'm going to look to get in, what trades I'm not going to look to get in, stuff like that, right? What are my target spots? So right before the market opens, so the market opens at 9:30. So at 9:30, the market it opened right around here. So pre-market, this is this whole left side, right? So 5 a.m., 6 a.m., 7 a.m., 8:30, and so on before 9:30, right? So in pre-market, I saw this spot right here, $90.55. This was a major rejection point in pre-market. So let me zoom and only show you the pre-market so you can understand. So right here, this is the pre-market. So I saw this right here. All right, so this right here, this was a major rejection point in pre-market. As you can see, going all the way back to the left spot right here, right? So it got rejected. Amazon got rejected heavy at $90.55. And it also was a support, a bounce area for right around here and right over here as well, right? So a few different times. So I knew this right here at some point in the day, I knew this was going to be a very important part where whether I would either get in for a bounce or for a rejection, I knew at some point it was going to come back around. So I added that to my watch list. Let me show you guys. So I added that to my watch list. I'm going to show you in my Discord what I was looking at. So this is the Discord. In the Discord, I send out signals. I send out watch lists, what you're looking at. I live trade every day. Every day I trade options. And then our members, they get to make profits. So this was my watch list pre-market before the market opened, right? So as you can see here, November 4th, which was Friday, the pre-market, I was looking at SPY, QQQ, NVDA, Tesla, Amazon, right? So for Amazon, my levels that I was looking at was $91.65 for possible calls, $92.57 for possible calls. But I ended up not doing any calls because it opened. When it opened, the stock just flew up, and I'll show you guys that. But this was the prices that I've marked in target. I marked down for my target spots in pre-market, $90.55. This was the rejection point, right? And then these were going to be the target point, $89.15 and $88.87. So right around that area. And the way how I got that was, let me show you. All right, so this right here, kind of like I said before, this was the rejection point. Let me extend that further out to the right. See, extend that to the right. All right, perfect. All right, so this was the first target point right here. This was the point that I was targeting, right? So I'm going to draw a line so you guys can see a trend line. So this was the bounce that I saw right here in pre-market. And this was another bounce. So I knew automatically right around this area, 88.74, 88.61, these were going to be the target areas, right? So these were the bounce spots, the major bounce spots in pre-market. So I know at some point during the day, it will come back around. And when it comes back around, I will be ready. So right there, so you can see again, right? Pre-market, $90.55, $89.15, and $88.87, right around there, right? So as I'm watching Amazon, right? As I'm watching Amazon, I noticed that Amazon started forming a bear flag pattern, right? So the market opens, right? The market opens. It is what, not right here. So this would be the 930, right? Market opens right over here at 930, right? So right when it opens, within the first 2 minutes, it came down, bounced, and then it shot up to 92.47, right? It shot up to $92.44. Right there within the first couple of minutes, it shot up, right? So right there after opening, it shot up. What happened is I didn't want to chase it because the market just opened. I didn't want to chase it. So therefore I was like, let me wait, let me give some time and wait for it to come back down, because I already had my spots and my targets already. So all I'm doing is just kind of waiting to see if my spots can hit. And I didn't want to chase it. So I just let it be, right? And then I saw that it got rejected. And as it got rejected, I'm still keeping an eye on it. I'm still keeping an eye on it. And then, yeah, so we're still right. And then I noticed right here, you're going to see it. I noticed a bear flag pattern. All right. So I noticed the bear flag pattern started to come. So right over here, right? So as soon as I noticed the bear flag pattern, well, first, what is a bear flag pattern? Let me show you guys so you guys can understand. A bear flag pattern, pretty much it's a bearish sentiment. That's when the stock normally is going down. And what happens is you get a little bit of a bounce and a little bit of consolidation, and then it drops, right? So let's take a look here, right? So a bear flag pattern, right? So first, what is a bear and what is a bull? When you always hear that, right? A bear is when the stock is going down. So primarily when you have that, as people are selling, they're panicking, they're afraid, so they're selling their stocks. So therefore the stock is going down, which is a bearish sentiment. It's coming down. And then when you have when the stock is going down, when it's bearish, what you want to do is play the puts. And the reason why you're playing puts, because you make money as that stock goes down. So you want to play puts, buy put contracts as the stock is going down. So therefore you make a profit. Bull is when you have an upward trend. So that's when you see people are buying. So therefore they're confident in the market. So you see a lot more buying power. Primarily you want to buy when the stock is low, right? When people are panicking, you want to buy when people are panicking, and then you want to sell, when there's a lot of greed in the market, right? Buy low, sell high. But when it comes to bull, when things are going up, you want to play the call, because you make money as the stock goes up, right? So calls, puts. So when it comes to a bear flag pattern, what you have is a candlestick, like a pole, and that candlestick, say if you have, say if you have like just think of like like literally just like a flag. So say if you have like a flag, right? You flip the flag upside down. So you have a pole. So the pole is the candlestick that's coming down. What happens is, right, it gets to a certain spot where it bounces. And when it bounces, it consolidates. You'll normally get some sideways action, or you'll get like this channel where it's going sideways in like an upward direction, and then after it drops. So it goes down hard, it bounces, moves sideways, and then it drops more. So the downward movement, the downward trends continue. So it's a downward pattern. As you can see here, based on the definition, the bearish flag is a candlestick chart pattern that signals an extension of a downtrend once the temporary pause is finished. After the strong downtrend, the price action consolidates within the two parallel trend line. That's the channel that I'm talking about, where it bounces before it goes back down. So it stays within that channel before it goes back down. So as it stays back within that channel, then you'll get a drop, right? So once the supporting trend line gets broken, the bear flag pattern is activated as the price action continues trading lower. Let me show you guys, right? So this is an example of what a bear flag pattern will look like. So this is your flagpole, right? This is your flagpole right here. This right here, flagpole right here is coming down, right? So what happens is with your flagpole, it hits a certain point where you get the bounce. And these two black lines that's parallel to each other, this is your channel. So it stays within this channel, it just goes up and down, it's consolidating, right? And as you can see, as it's consolidating, you get a sideways movement, but it's like in a little bit of an upward trend in this movement. And then boom, it drops again. But this sideways movement, this is right here, this part right here, this is your flag. So you have your pole and you have your flag. Pole, flag, and then comes down. So this is a bearish sentiment. So that means expect a move to the downside once it breaks those levels. Right. So now let me show you. I'm going to pull up Thinkorswim so you can see again. Right. So I want to draw it. So as I'm looking at Amazon and I'm starting to see this pattern. So Amazon, it got rejected up here, and I'm watching and I'm keeping an eye on it. And what happens is, as I'm watching, all right, so let me make this a little bit bigger for you guys so you can see. Edit properties. I'm just going to make the width a little bit bigger so you can see. All right. So this is the flagpole. And then what happens is, once it got over here, I noticed that's where it started flagging. Right. This is where it started flagging. So, all right, here. All right, so this is where the market is right here, right? So we haven't gotten to this side over here. So pretty much it's right around here, right? I noticed that it bounced, right? I noticed that it started forming the flag. So what I did, all right, so let me show you the flag, all right? So look here, all right, and then boom, you have the perfect flag. You see that right there? Come down. So as I notice it's forming this flag, if you look, this red line right here that going across, this was the support and resistance line that I drew from earlier. This was what I had in the beginning in pre-market as a potential bounce or rejection point, right? It came all the way back. So I knew at some point this was going to be a major support or rejection line, right? So if you look, so I know right here, as it's forming a bear flag pattern, I know a bear flag pattern. What happens in a bear flag, it comes down right afterwards. Once it breaks the flag, it comes down. So I started giving our members a heads up to get ready for an Amazon put, because I saw the bear flag happening. So right around here, I gave the heads up, right around here, I gave the heads up. And then right after I gave the heads up, and then my entry point was the 90.56, right? 90.56 was the heads up, right there. And then right after I gave the heads up, what happens is it just went all the way down. It was like the perfect play. Let me show you. Let me pull it up for you. All right, so you can see. All right, so give a heads up to our members. Looking at Amazon, November 4th, $90 put, and then sent out the signal. Amazon, November 4th, $90 put. Amazon, So November 4th is the expiration date, and then $90 is the strike price. And then at 90 cents is the contract price. So for 90 cents, what that means is $90 I'm paying for the contract, because for one contract, it equals to 100. One options contract is equal to 100 shares. So therefore, you have to multiply 90 cents times 100 to get the true cost of a contract. And I purchased 15 contracts. Therefore, you would have to if you multiply $90 times 15 contracts, you will have $1,350. That was the cost that I paid for my contract. Right. So let's take a look at the profit. Boom. Look what's happening. You see that? Look, you see this right here? You see contract 110. I sent out the signal at 90 cents. And look at this. 90 cents. That's at $1.10. $1.10. And as we're in the signal, I'm keeping our members up to date with what's happening. $1.10, $1.14, $1.22, $1.30. You see this? And then now take a look. 15 contract was the contract. 15 contracts, the amount of contracts that I bought. And then right here, I end up closing at 80%, made about $1,000 right there. You see that? Perfect entry. So I'm going to pull it back up for you guys so you can see exactly what I mean. And let's take a look. Matter of fact, let me show you exactly what was my entry, what was my exit point. Because if you look at the watch list, right, my target was $89.15 and $88.87. That was my target in pre-market, right? So when I gave the members the heads up, that was approaching my first target, where it says you can take profits. You can take profit if you're comfortable right here. That was when I gave the heads up for the first target, right? So I'm going to pull up so you can see exactly what I'm talking about. So let's take a look. You'll see, right? Look at the targets. Look at the targets. You see that? Perfect. Right there. This was the target, $89.15. And then second target was $88.76. It's amazing. Look at that. It did exactly what I thought it would have done. And that's why this is one of my favorite patterns to use. So remember, if you look here, head it down, look where it ended. Look where it ended. I'm going to show you exactly. So it bounced literally right over here. This was the perfect entry and the perfect exit. Perfect entry and exit. It bounced right over here. And if you look, the same spot right around pre-market, this was the bounce area right there. I'll just show you guys so you can see the exact spots. Pre-market. Right there, right? Pre-market. Right there. And then right around here. Right there, as you can see. So I hit all the different spots, the entry point, and then my stop loss in this trade was 15%. 15%. So I only risked $203, or yeah, $203. 15% of the $1,350 should come out to about $203. I only risked $203 to make $1,000. The risk to reward in that was perfect. It couldn't have been a better entry and an exit, because right here is when it bounced, and then right here from the entry from the pre-market. All right. I'm happy with exactly how that played out, because one, make money, and then two, members were happy right here. Right after that signal, I told them there was no point in getting into another trade. They should just take their profit, because why risk that? Why risk it? Why risk it if you've already made the money? And then also it was a Friday, 0 days to expiration. Therefore, the risk is a lot higher in the stock market. So therefore, it would be smarter just take your profit and enjoy the rest of your day. If you want to get into these trades with me, you can. I trade live every single day in my Discord. I'm going to leave the link below in the description so you can join for free, so you can take advantage of this recession and make some money. If you find this video to be helpful, leave a thumbs up, subscribe, share with a friend, and if you have any thoughts or questions, leave it in the comments. And thank you for watching. See you in the next video.